And if the debt ceiling does default and the stock market drops, how secure would your investments be? Anthony Sabella spoke with financial planners to find that out.
Another closing bell and another day closer to reaching the debt ceiling. With the first ever government default now a real possibility, Wall Street is keeping a close eye on Washington.
It could take a modest to large swing in the downward trend.
But what does that mean for stockholders in mid-Michigan? Financial planner John Bush says it varies from person to person. First, the good news. Bush says those relatively early in their careers will most likely be fine and, in fact, should take advantage of a down market.
If the market does go down, you're able to buy much more stock or mutual funds at a lower price. So it's no different than saying buying low and then selling high.
On the other hand, if you're closer to retirement, you should make sure your investments are diverse in bonds and other markets. That should lessen the impact.
You've got to spread your risk out. You don't want to put all that money in one basket into one little fund or one little stock and hope for the best.
If you're still worried about your investments and you're hoping a late tax return will help, you may want to reconsider. Tuesday marks the end of the 6-month extension to file returns, and as Nikolai Luke of Simplified Tax and Accounting told me, the shutdown has those in limbo.
So if you're expecting a refund, I've been told that even though you have to file on time, that do not expect refunds until the government reopens.
In the meantime, that means continuing to ride out the shutdown.
But the good news is it's always been short term.
Anthony Sabella, Fox 47 News.
And one more tip that experts suggest is that you contact your financial planner to see if your investments are strong enough to withstand a market downturn.